early on, right, high school, I learned how to program. I had made a website. What it was is it was fake money, but using real stock data, right? It was pulling all the data from Yahoo Finance at the time. And so you could practice being a stock investor. I made this game and I ended up selling it on one of the online communities. So whenever I sold it to him, I think I sold it to him for like $6,000. And the guy was making like 10K a month off of the thing that I sold him for 6K. Every deal in the market, there is some equity, some investor that was happy with that deal at that price point, right? Even if it's overpriced, like that investor was happy to take on maybe less returns, or we look for a certain return threshold, but other investors are okay taking less money. If you want to go fast, go alone. If you want to go far, go together.
Hey guys, this is Sharat with REsimpli, host of the REsimpli Podcast, bringing you a very special guest, Ferris Musa, on the podcast. Ferris, welcome to the REsimpli Podcast. How are you doing today?
I'm doing good. Thanks for having me, Sharat.
Absolutely, man. Thank you so much for jumping on the podcast. Tell me a little bit about yourself, where you're joining in from, and a little bit about your background.
Yeah, absolutely. So, joining from the great state of Houston, Texas, sorry, I guess city of Houston, Texas, I guess. And so that's Houston downtown back there somewhere. And for those that don't know me, my background really is software. So it kind of came up, that tech world. I mean, I had my own web company in high school. Then I ended up interning at Microsoft, went full-time at Microsoft, and then left Microsoft to start a software company. But fast forward, ended up starting a company called Disrupt Equity, right? And that's kind of where the name Disrupt came from, right? It's got that tech spin to it, and really just realizing that there are gaps in the industry, right? You have a lot of legacy companies in real estate that haven't really modernized, and our secret was really modernizing, using a lot more tools, systems, and processes than most. And so started Disrupt Equity, and fast forward 6 years. I mean, today Disrupt Equity, we've done about 900 million in acquisitions, syndicated about 300 million of equity, and we have our own management company, so we do all the day-to-day operations in house. So
Yeah.
that's me and Disrupt in a nutshell.
Yeah, absolutely. Great background. Yeah, I mean, tell me, like, what led you to the point where you wanted to modernize real estate? Like, where did you see which specific vertical within real estate that you noticed needed to be modernized?
Yes, I mean, good question. So after I left Microsoft, really, I left Microsoft with the thought of building software in old industries, right? At the time, I didn't know that would be real estate. And, fast forward, we ended up building property management software, right? And initially it was for the guy like me who I had a bunch of rentals, 4 to 5 rentals is kind of the target market, and giving them kind of the tooling to be able to manage them, right? How do tenants submit maintenance requests? How do they collect payments? Doing some light accounting. And so we had built out that software as a product called Landlordable. And the mistake we made was really pivoting and trying to sell to property management companies, right? That would bring us 20, they're not 20, really 200 units in one go, versus the guy that may have 3, 4, units, and that guy will only pay a couple bucks per unit versus the company will pay a lot more. And so, ended up not panning out, but learned a lot about just kind of that space. And at the same time, I had kind of pivoted to apartments. And as I got into it, I just realized that, hey, it's kind of old school, right? There's not a lot of tooling, systems, processes. A lot of people just do things because the way they've been doing it. And, that's ultimately what kind of led me just to really double down and start to just scale more into that space.
And what happened with the property management company, Landlordable?
Oh, I mean, so we ended up dissolving it. I mean, long story short, it just, my friend was a partner, and it was just a lot of work, right? And we
Right.
just, we did not get a good handle on sales and marketing. So that's where I knew with Disrupt, I'd never make that mistake, right? Sales and
And what
marketing
year
are
was
really
this?
key. That's a great question. This is 2017,
Okay. So there's
maybe
still like
maybe
there's
even
like
early 15, 16, somewhere around there.
okay. I think Buildium and then a couple of other
Yeah,
Appfolio.
so
Like there's
Buildium, Appfolio, those were around. Those were our biggest. Like Buildium was probably the number one competitor at the time.
right.
But then we're trying to pivot and really compete more with like RealPage. And it's funny because I'm one of probably the few people in the world that has built property management software and own a property management company. And now that I have property management, big property management company, I realized the mistake we made was really today, right? We're a RealPage shop, so that's what we use for all of our property management software. If one of the competitors like Yardi came to me today and said, I'll write you a check for $1 million to switch, I'd probably say no, right? It's too much friction. It's really sticky. We have 200 people trained on how to do things in RealPage. It's a lot of work. And so, it's a extremely sticky product. And so the motivation to change it's difficult to talk a new person into it. So
Yeah.
that was the
No, that's
mistake.
That's a great point. And not only are you changing, now the tenants are also have to get used to a new
Oh,
system. It's
absolutely, right.
still easier for your own team members, but imagine like having every single tenant, they're so used to going to a platform. Yeah.
Yeah,
I,
and that was one of the mistakes. The other mistake too was just not realizing the breadth of tools, right? Like we all fixate on the obvious. Okay, how does a person submit a maintenance request and having a portal for a tenant? Okay, it's straightforward. How about you collect money? Okay, great, straightforward. Having some light accounting, straightforward. But then you kind of miss that you really have to build out a mini QuickBooks. I mean, you can't. It's not about doing superficial accounting
right.
for these things, for these properties. I mean, you have to there's a lot more in-depth accounting that needs to happen. And so, now that I have a property company, I realize just we had built out maybe 10% at most of the
Right.
feature set that we really needed to be able to compete effectively.
Yeah.
So for the companies that actually did roll with us, I'm shocked that they did, but those were really, those are the only customers we were able to close, which is a person that has a small property management company. Maybe they have 20 units and they're shifting and growing and need some sort of tooling. So we were better
Right.
than nothing. But then once I kind of really understand the ecosystem, realized that we were far from just a good enough product.
Absolutely. And then, so you got into multifamily because you had your own multifamily unit. How did that, like, the
Yeah, I
quick
mean, I had bought a bunch of houses, and actually my first purchase was a fourplex. So I bought a fourplex, then I bought a bunch of houses for myself, right? Just an investment.
all
And
in
then
Texas?
all in Texas. I was actually still in Seattle whenever I bought that fourplex. And so I did 3 closings in the first 90 days period. First purchase of my life was that fourplex. Never bought a house, anything. And then just built out a small portfolio, realized it didn't scale. And so then I was looking at doing my own apartment. So I was trying to do a 32 unit in far north Houston. And I'm glad I didn't win it because then I learned about syndication, met my partner, and we ended up, creating disrupt equity. And it's really geared towards larger apartment complexes. Instead of doing a 32 unit myself, it's much better to let's go do a 200-300 unit apartment and we syndicate the equity with our investors, buy it, and then operate it as well. So
Okay. So yeah, walk me through like what did that first deal look like for you? And then how did you go about raising money?
the first day we created disrupt equity, I mean, no idea it would be what it turned into. I mean, I thought it would just be my own small thing. Maybe I do a deal or two, a few friends, call it a day. But what I ultimately realized is that, hey, it's about how do you operationalize and scale, right? Like I love trying to operationalize and scale things. That's where it becomes fun. And so for us, we did a first deal was a deal in Atlanta that we did together. And, it's a deal that I knew we couldn't go wrong. I mean, it was priced low and you just had to have the grit to work through it and get it performing. I mean, it was a rough deal in a rough pocket, but we turned it into an actually pretty nice deal in that area, right? And got the occupancy, on paper, it was 80%. We brought it down to 40, 50%, and then we brought it back up to 90% once we really cleaned it up. And so, kind of had early successes, right? And learned, made enough mistakes to learn the business while not like stepping on a landmine that was going to kill a deal, right? And did well, made those exits, and from that, your investors start to tell their friends, right? It becomes a lot of word of mouth, and couple that with just constantly sharing what we're doing, building a brand, building a following, newsletter, all those things. So a lot of stuff that's normal for a tech company. Most real estate companies weren't doing that. I mean,
Right.
even something as simple as a newsletter, right? Like most companies weren't doing that whenever we started. We were one of the first ones to do that. And then immediately the following month, one of our competitors started to do one, but theirs I could tell was a knockoff because their images weren't rasterized. And so they were just making it look like ours and something nicer and just sharing more about what's going on. So
And then so you bought a fourplex, then you bought like 2, 3 single family, and then you
I think
just
like
realized
five.
that
Yeah.
it wasn't going to scale. You weren't moving fast enough. Is that kind of what made you look into
Yeah, for
multifamily?
me, it's that you end up having, a loan for each property. Those loans get flipped to different companies. So you're always kind of trying to figure out who actually owns the paper and who should you pay to. In addition to that, you had insurance to deal with. And again, the insurance is all expired different times. And that was always a paper chase. Then you have to pay, figure out the escrows and the taxes. There's a lot of minutia, right? That's not really
Right.
it's a lot of the doing versus what's core to an investment, which is buying a good deal at a good basis, getting, positive cash flow.
Right. I mean, I can tell just by, talking to you for a few minutes that you have a mindset of always thinking big, like, and like operationalizing. Like, how did that come about? Did you always have this kind of a mindset, or just, working at Microsoft, your background influenced that?
No, actually, maybe good question. So I've never been asked that question, but actually I think I know the answer, which is, early on, right, high school, I learned how to program, and I was, I'd made money off of games, but learning to program was like the first time making money off like a real thing. To me, games aren't like a business, right? It can be, but I had made a website and it was called I forget what I had named it something else, but essentially what it was is it was fake money, but using real stock data, right? It was pulling all the data from Yahoo Finance at the time. And so you could practice being a stock investor, right? And again, I was ninth, 10th grade at the time, and I made this game and I ended up selling it on one of the online communities. And the guy that I sold it to, he rebranded it to Wall Street Pros, and he hired me to update it. So whenever I sold it to him, I think I sold it to him for like $6,000, and I was stoked because that took me like 3 days to make. I was like, made a lot of money for a high schooler, right? For 3, 4, 5 days of work.
Yeah.
And so I was, I felt really good about it. Well, fast forward, the guy hired me to continue to make more improvements, and the guy was making like 10K a month off of the thing that I sold him for 6K,
Wow.
right? And so it kind of forced me to think like, okay, how do you grow and scale things? And so then started to make my own websites, and then I started to hire people to, build my websites. And in high school, I had had a guy in South America, a guy in Ukraine, and a guy in India that were like my 3 team, and building out what I needed. And so I guess that maybe taught me early on just the value of having a team and operationalizing things and doing something bigger, right? I'm a really fan of there's a phrase that I really like, which is if you want to go fast, go alone. If you want to go far, go together.
Absolutely.
And
Yeah,
it's
that is
just
so
kind of,
true.
yeah.
That is so true. And so you're doing great on the tech side, you go and work for Microsoft. Like, what made the pivot to real estate from there, like owning, physical assets?
Yeah, so for me, whenever going to Microsoft was kind of an accident. I never really planned it, and I ended up I wasn't planning to go to
That's a
career.
good accident to happen.
Yeah, because my friends went to career fair. They were going to career fair. They told me to go, and I wasn't planning to go. But then I'm like, all right, sure. So I put together a resume, and like the story I just told, I was one of the only people in college that had real experience to share, right? Where I had my own web company, I'd done all this, so I got interviewed by all the companies, and so ended up interning at Microsoft. And I really liked my team. They gave me a full-time offer before my last year, and so then I was like, all right, I'm going to go to Microsoft for 2, 3 years and then leave, right, and do my own thing. And ended up going to Microsoft for I think 3 years, a little bit longer than I wanted because I wanted to left at the right time in the release cycle. And I was a program manager at Microsoft, and so I got exposed a lot more to, not coding, right? I didn't do any coding at Microsoft, but I was a very technical program manager, right? So I could talk coding. I could also talk all the program management skills that I just kind of refined. And I like to joke that I've been able to build Disrupt because I got really, really good at project management, right? Which is really the skill set of what, to build a company, you have to be a very good project manager. So that, then yeah, that was Microsoft, and I left, and everybody thought I was crazy, right? And but I left on good terms. I'm still friends with my old managers till this day, and they'll occasionally poke me and say if I ever want to come back. But I guess that's whenever I went and started the software company I mentioned, right? And
Right.
while I had that software company, I started buying real estate just for my own personal investments.
Right. And then it just you like the cash flow aspect of the real estate that kind of, got you more interested in.
Yeah, I mean, just the whole business of real estate, right? It's really,
Right.
and I tell people like real estate is not a get rich quick scheme. Too many people think that, right? And
Right.
yes, some people make a lot of money very quickly in real estate, but that's not what you should bet on. Instead, you build wealth slowly over time, but you do build wealth.
Right. So you go into real estate and you've done incredibly well. Just tell me a little bit about kind of, your portfolio size that your company has acquired so far.
Yeah, so Disrupt Equity, Florida and Georgia, those are our 3 markets. We like to know every deal that happens in our specific markets. And so Texas, we're in all the main metros. Georgia, we focus in Atlanta, and then in Florida, we're kind of in that, right now we're in Daytona, Orlando, that pocket.
Right.
And we have our own management company. So we used to use third-party management, and then early on we realized that most third-party management companies don't do a good job. And again, they're very dated. Most of them at the time were very, very dated. That was really the most dated thing in the industry I saw. And so we ended up starting our own management company, which today is about 200 employees, and it does first and third-party management. And so it's a whirlwind. I tell people it's the hardest business I've ever dealt with. And we have multiple other companies that I'm kind of not going to go into on this call, but of all the companies, property management is the hardest of them all. I mean, it's very people heavy, right? There's a lot of money moving in and out each month. a lot of accounting that needs to happen, et cetera. So tough business, but
Right.
again, it's the crux of what we do, right? Like that is the, without the management company, Disrupt Equity would not be what it is today, right? That is the differentiator for us.
Yeah, I own several businesses and I have a small property management company. We manage about 250, 300 units. That's the one business that both sides of, the teams or both sides of the markets that you're serving, the owners and tenants are never happy with you. They
Yeah.
always are complaining about one thing or the other.
No. That's exactly it. I mean, the
Yeah,
problem is you're in the middle of everybody, right? Like,
exactly.
and you look at an apartment review, very rarely do people leave good reviews, right? They only leave
Yes.
a review if they're mad. That
Yeah.
doesn't mean that you're a terrible company. It's just, hey,
Yeah.
they're complaining that I had an issue, but maybe the other
Yeah.
900 people had a great experience, and,
Yeah.
it gets forgotten. And so,
Absolutely. Yeah,
uh,
that's why you have to take like negative reviews with a grain of salt because people who
uh,
are pretty upset, they're the one who are going and writing review, not the ones that are happy. So you have
yeah.
200 employees across 3 markets. How many units are you guys?
We're at about 7,000 units, plus or minus,
Seven.
somewhere 7, 8,000. We've sold some deals somewhere in that range.
Okay, got it. And then is that all like primarily focused on Texas and then Atlanta and then Florida market are you like kind of secondary market?
Yeah, I mean, we focus on all three. The core of our portfolio is Texas for sure,
Mm.
right? And we used to have a lot more in Atlanta. We've sold off a lot, but now we're kind of slowly building back up in Atlanta. And then
Right,
Florida was one that we got into, but we never really were able to scale up there. I mean, pricing is just too competitive, right? I mean, we cannot get enough yield. The price
right.
points are just cap rates are still really low. Insurance has gone up, and there's other costs that are kind of really killing deals. And so I think just in general, we have not been able to scale up Florida. And moving forward, I'm not sure how much we'll focus there, but we love the Atlanta market. We love the Texas
Yeah.
markets.
How long did it take you to go from buying your first property to like 7,000 odd units that you guys have under management?
What is that? My first fourplex, like way back when, 9 years ago, maybe.
Like, wow, that you've done amazing. Like what's been the secret? Like what's the one thing when you look back and you're like, man, I'm so glad we did this one thing correct.
It's not one thing. It's really forcing yourself to cross the chasm, right? I don't know if you've read that book, right? I mean, you're in the tech space, but there's,
I
I
have,
think I think it's called The Crossing the Chasm. And my partner, he's not he worked kind of in tech, but I was more of the tech startup person. And then for me, it's just constantly pushing ourselves to double down and reinvest and grow to the next level, right? And so maybe the answer to your question is I'm glad that we always doubled down and reinvested. I mean, the joke I have with my partners, we have like 10 people in the company that make more than we do, right? We're betting on the equity of Disrupt Equity,
right,
right? And building the company and really getting much more seasoned people in. In each phase of a company, you have different things that you're like, hey, this really made a big difference, right? For example, there's a point where bringing in a recruiter in-house, right, really made a difference where she's all in-house. That's all she focuses on now. We're not scrambling to place people on a property, right? Turnover's gone down. She's able to sell the story, the vision, all of that. That made a big difference. Or prior to that, getting an asset manager, whatever, it's just me and my partner, right? Like we doubled down and hired an asset manager that we could barely afford, right? But that person is able to focus on operations while we focus on growing the business. And so each step of the way, it's about, hey, what does the next step look like and how do I back into it, right? And
right.
continue to support the growth. And we've probably hired too many people too fast, but that's also the benefit of
Yeah,
getting to where
that's
we've gotten to.
That's part of growing pain, and it's interesting you said you have like a handful of people that are making more than the owners of the business. I think that's
Yeah.
where you have to like have humility to realize that you're in this for the long term.
Hmm.
You have to not let your ego get involved. Like, hey, how can this person make more than the owners of the business?
100% agree.
Yeah,
And that's where it's good to also have like a partner that thinks that way too, right?
yeah,
Whereas my partner, he's been patient, he's willing to, we don't take much out of the company, right? We continue to live, a fairly simple lifestyle because we're trying to build. And I tell people we're young, right? I'm 37, I think, right now, and we're building a company for the next 20 years, right? It's not like we're building a company for the next 2, 3 years. We're trying to extract all we can out of it. So.
right. What drives you? What's like your motivation or drive behind this?
I just love what I do and see if I can take it to another level. Like I guess I'm always kind of trying to see if I can operate at a higher level than I did last year, right? And what else can I do to push it forward and grow and innovate and think outside the box? And so,
Right. So when you look back over like incredible decade that you've had, like what is there anything that you would go back and do differently? Any lessons that you've learned along the way?
oh, there's a ton of lessons you learn along the way, right? I mean, from, you start to become almost like an attorney, and I'm glad now we have in-house counsel, so now that problem is handled. But like, there's many mistakes we made, right? From deals that we just like, I remember COVID, we had a deal that we were buying, right? We had put up, I think it was $250,000 of earnest money, right, as part of that deal. And then COVID happened, right? Like we literally had gotten the deal into contract, put up the earnest money, started to raise the money, and then COVID happens. And the seller ends up basically, so at the time, I don't know how much you remember, but interest rates fell. So the
Right.
seller, and we didn't know what the world was going to look like, right? This is like right as it all happened. So the seller said he wanted to hold on and refinance if we went back out. And so in my head, I'm like, yeah, let's back out, and we get back our earnest money, and we just live to go another day, right? Because again, it was supposed to be we back out, we get back our earnest money, he gets to go refi, and everybody's happy. Well, we should have papered it up before we backed out of anything, because seller ended up, turning into complete opposite of what he said, and kept our earnest money, and that became its own problem. And so you make these mistakes along the way, and it's about, you know, and we lost six figures on that deal, right? Like it's total BS, and we were lied to, and we got shafted. And you make these mistakes along the way, and it's really about having the confidence to know how to navigate them and solve them as they happen, right? And then iterate from those. And so like again, it's you will all, everybody makes mistakes, but it's just about making sure you just don't step on a landmine, right?
Right.
It's like get a couple of flash wounds, but just don't try to avoid the landmine. And that was close to being a landmine, I mean, as it could possibly be, right? We didn't have insane amount of money at the time to just blow, right? And luckily we were able to solve that one and navigate from it. And, to this day, that broker comes back and, he knows that he lied to us about it and tries to make amends. And I've told him like, hey, like, because he tries to see if we'll let him sell a deal. I'm like, no, not until you pay back the money we lost.
That's
So,
crazy.
so
Yeah.
you kind
No,
of,
I mean
you
that's
make these mistakes constantly. And maybe the other big mistake is you learn holding on to certain people too long, right? Like that's been a mistake that
oh
we've
my
made.
God. Yeah.
You probably have some of these same things. My
Yes.
partner and I, like, we're probably a little too nice, right?
Yeah.
And it's not that now we're like the cynical, person, and we're actually probably still too nice, right? I mean, we just spent the past 2 days with our annual planning, right? Where we do EOS, and so we have our coach was in town the whole 2 days, and you work through and you kind of evaluate people in the company, how they're doing. And you the longer you take to make a change, the more you will pay the price. I tell it to my leadership. I'm like, what is the people in this room that are going to pay the price, right? And there's so many times that like you kick the can down the road for 6 months, then you get rid of that person, and then you're like, oh my God, it's a breath of fresh air. I should have done it 6 months ago, but now you're having 6 months of cleanup to do, right? And that's
Absolutely.
probably the biggest mistakes that we've made is that. And so it's kind
Yeah.
of learning from that and trying to be smarter about hiring and about making the changes people were needed. So
Yeah, absolutely. Yeah, I mean, like one exercise that I do is if I have any doubt about like an individual, probably that's a sign that person should not be part of the company. But then the other thing that I ask my team to do is, hey, ask yourself a question. Knowing everything you know about this person, would we hire him again? If no, then we need to move on. If it's
yeah.
a yes, it has to be hell yes, or it's a no. If it's a no, then we need to move on. I think, yeah, but that's like looking back, like I made so many mistakes on like holding on to people too long because
Yeah,
it's just like being hopeful and optimistic that person is going to change.
and I've heard it two different ways. And one thing is like the second you start questioning if you have the right person, you already don't have the right person, right? It's not even
100%.
about, you
Yeah.
don't even need to do the exercise. If you're already
Right.
saying let's go do the exercise of
Yeah.
is it a hell yes, then you already know the answer,
Yeah.
right? And the other thing that I heard, which I kind of like a little better, which is if you were to let's say you exited the company and then 10 years down the road you decide to start it back again, right,
Yeah.
from scratch, would you call that person to come help start it? And if
Absolutely.
that's a no, then you probably don't
Yeah.
have the right person. So
100. What's your biggest challenge right now, given where we are, end of 2024, the election just ended?
I mean, right, the biggest challenge, the most immediate challenge is the 10-year keeps going up, even though the Fed rates are dropping. But I mean, for those that monitor the 10-year, it's gone up half a point in the past 45 days, which is huge, right? And so it's supposed to go the other way, and we're in the midst of closing a deal, and it's like we've got our loan reduced another $4 or $5 million. So now we got to come up with $4 or $5 million to raise. And so, and it's just navigating all the uncertainty in the market, right? I mean, rates are high. We have some deals that have floating rate debt and having to navigate that. And, there's just a lot going on. And then couple that with like certain markets, right? Like Atlanta, we've had negative rent growth. And so if you really just think about it, you had negative rent growth over the past year and your rates are sky high, right? Like it eats into all your margin. And so really just, working through all of that. And thankfully we don't lever up too high. So that's been the one thing that's kind of saved us versus a lot of other people that lever up and take on as much debt as they could. And now those people are just, those people have gotten foreclosed on, right? And so it's just really navigating all of that at the same time. It's just a lot of moving parts and making sure everything keeps moving forward and keeping, everybody energized and motivated as well. So.
Is your exit with these apartments, the properties that you're buying, just to clean up, put good operations and systems in place and then exit, like sell them, or just refi into a good long-term, like financing?
We are opportunistic, right? That's ultimately, how we put it. I mean, we go in with a 5 to 7 year plan where we'll go in, improve the property, typically refi year 2, year 3, then hold on to it and kind of cash flow from there. But I mean, we're opportunistic, right? Like in Atlanta, we did deals that we were going to do 5 to 7 year holds and we sold them in 3 years. And so it's really, because real estate really is cyclical, right? And I tell people, time heals all wounds in real estate. So it's about making sure you can be in the deal long enough, right? And, with that, it's about giving yourself multiple options. But if you're also in the deal long enough, then you can ride the cycle, right? And try to, you're never going to know where top is. You're never going to know where bottom is, right? But, there's momentum. So being able to, if you let a cycle complete, whether that cycle takes a year, 5 years, 20 years, right? You will get to a point in the cycle where it's high and maybe there's a good return to make an exit. So.
Right. And I feel like it's also a very individual decision, right? I mean, you have to look at your personal circumstances, like if it's the right time for you to exit the deal or not. You may still feel like, okay, there's a little bit of still room to grow for the market, but you need money for something or your personal situation is changing. At that point, you have to make a decision. I mean, yeah, that's always the tough part, is knowing when the time is right to buy or sell. Like it's just something like you have to like roll with the punches. Is that what you would say?
Kind of, but I tell people too, it's about, if it makes sense, make the decision. And what I mean by that is, I'll give you a couple examples. So, I mean, right now we're buying a deal. The seller had this deal under contract to sell at 55 million 2 years ago. And then the buyer came back and tried to retrade it and reduce it to, I think, 53 million. Well, the seller decided not to go for that. And long story short, it never closed. And we're buying the deal at 38.5 million, right? So
wow. In Texas?
So no, it's Atlanta deal. And essentially, if you think about it, right, what happened in that case? It made sense for the seller to sell at 55, and it also made sense for him to sell 53. He would have been really happy. But then, he thought the market's going to keep going up, and it didn't, right? And so, I tell people, we made exits in Atlanta where same thing. We sold it, and if we'd have held it another 6 months, we could have made a good return. But I sleep good at night knowing we made the exits. And, the phrase that you may hear sometimes in the market, it's, bears make money, bulls make money, pigs get slaughtered, right? And so it's about not being a pig. So if it makes sense, you accept it and move on. Don't have to sit there and keep looking back and, well, if I wait another 3 more months, then market's going to keep going, because who knows what the future holds. And so I've learned early on, and and maybe back to the story of, we said whenever I was kind of in high school, right? I made money and I started investing in the stock market, and I lost a lot too. And I learned early on the value of taking wins off the table, right?
Yeah.
So, yeah.
What do next 3 to 5 years look like for you personally, Ferris, and Disrupt Equity?
I mean, we're going to keep growing it. I mean, we're constantly growing our investor base, right? Investors reach out to us all the time. We're constantly growing our broker relationships, sourcing more deals, and trying to just grow the portfolio, right? And just getting, because the more we grow it, the more economies of scale we start to get. Instead of having 5,000 units in Houston, we start to have 20,000 units, and I can get better pricing power on appliances. I get better pricing power on vendors, all the above. And so for us, I mean, we have a lot of the foundation that we've built, right? And by design, I mean, we've continued to double down and invest in the company and hire. Like I said, we're overstaffed in a lot of ways, but that's because I can double the company without needing to bring on more people, right? But getting the right foundation. And so for us, I mean, real estate is cyclical, right? And we're kind of, riding the lows right now and working through and setting ourselves up to where once kind of the environment shifts a little bit, right, we come out strong, right, and be kind of some of the just really get to start to ride the growth there. So
Is there something that you like are personally most excited about for over the next 3 to 5 years that you're looking forward to?
over the next 3 to 5 years,
I know it's a long time.
yeah, that's a tough. I mean,
Yeah, there's a
it's not
lot.
as
I mean, if you look back in the last 3 to 5 years, there's so much that's changed in the world. So
yeah.
yeah.
I think it's that we're starting to see more buying opportunities, right? Like this deal I mentioned. I mean, that's a big discount, right? And so, you had this disconnect between buyers and sellers for too long, where sellers still wanted the 55 million and buyers were at 38 million, and sellers weren't forced to make a decision because they still had some time on their loan, whatever, and they didn't know where the market is. And now that gap has tightened a lot more. And
Mhm.
so, I think there will start to be buying opportunities. And for me, I'm just excited about, and like I'm finally past the election, right? Like letting the markets and the environment settle. There's a lot of uncertainty, right, with around the election. And, you know, if the real estate kind of lending market continues to deteriorate, well, that means there's going to be opportunities, right? And so really trying to time it with investor sentiment improving and picking up, because there is a lot of money out there. There's a ton of money on the sideline, right? And it's about being kind of the person to really capitalize on that on deals not performing. And so really just kind of waiting to see when over the next 2 years does that environment start to
Wow.
really pick up, and trying to set us up to be ready for that growth once we get there. So
Someone who's listening to this and they want to scale to the level where you're at, you think the bigger challenge is the financing, the investor side of it, or the deal side of it?
I would say it's probably more the you have to do both, right? I mean, ultimately at its core, what does our company do? We find deals, we find money. That's what we do. Find deals,
Right.
find money, find deals, find money. And then, you have to operate. And the thing I like to tell the team is every deal in the market, there is some equity, some investor that was happy with that deal at that price point, right? Even if it's overpriced, like that, that investor was happy to take on maybe less returns, or we look for a certain return threshold, but other investors are okay taking less money, right? Less returns on their money. And so the more breadth you have investors, the more you can actually buy, right? Because the way we have to buy is we're buying deals that we know our equity is happy with. But if I have more variety in equity, that gives me more, my buy box changes. I know that, Sherrod wants a green apartment, and I know this guy wants a blue apartment. I know this guy takes a yellow apartment, but I have to have three guys to be able to go buy yellow, green, and blue, right? And so it's really kind of thinking in it from that lens. And so I think the equity is always the thing you have to, that's who our customer is. Our customer really is the investor, right? The product we are selling is the investment opportunity.
Absolutely. Yeah, that's a great way to put it. Paris, this has been absolutely incredible. I have 6 quick fire questions for you. So just
Okay.
try to answer as quickly as you can. What's the best business advice you've ever received?
Best business advice I've ever received. Oh, that's actually a tough one. Um, Maybe it is, if you want to go fast, go alone, go far, go together. I mean,
Yeah.
I do really like that. So maybe I'll take that.
Yeah. Right. What would you say is the single most essential trait for success in real estate investing?
I think project management. I mean, there's a lot of moving parts. You have to be organized. You have to understand the parts, and you have to be able to keep track of it, right? Even some people on our team, they're very linear, one thing at a time. But right now, I'm juggle 10 threads at the same time. So how do you keep handling it all?
What book would you recommend to other real estate investors or business owners?
Yeah. So the book that I really like that kind of with mine is called The Millionaire Real Estate Investor,
Oh
written
yeah.
by Gary Keller. I forget, the guy
Yeah.
that started Keller Williams. And it's a good book because it talks about, very simple example of a couple that makes something like $80,000 combined income, and how over the course of 30 years, they could retire millionaires, right? And it kind of opens your eyes up to, how financing works and how time is your friend in those kinds of structures.
Absolutely. I'm glad you brought that up. That's the book that got me started down the path of real estate investing.
Yeah.
So absolutely great book. What's your most important passion outside of work?
I like to say my hobby is collecting hobbies. So my current hobby is, flying. So I get a pilot's license. I'm working on my
Yeah,
instrument right now as well. It's a lot of fun. It's kind of a combination of thrill, a lot of technicalness to it, and something new. And, just being in an airplane and forget about everything else. You focus on the airplane. So
do you own a plane or plan to own one soon?
yeah, so I did. We bought a plane in May with 2 friends. So
Nice,
it's
nice.
a small Cessna 182. Don't everybody thinks like jet. I'm like, no, I'm not. I can't even fly a jet if I wanted.
Yeah,
It's not a jet. It's just a single piston engine. So
that's great. That's great. What's an interesting or fun fact most people don't know about you?
oh, that I had, I guess, a web company in high school. Friends
Yeah,
were flipping burgers, and I had this web company.
your flipping company. Yeah,
Yeah,
that's
so
great. All right, Ferris, if you could spend a day with anyone dead or alive, who would you want to spend the day with and why?
maybe Warren Buffett. I mean, he really does have a long-term outlook, and it's just every time I read more about him, it's kind of interesting at just how patient he can be, right? So maybe that, yeah, maybe that's the answer.
Yeah. All right, Ferris, anyone listening to this podcast, if they want to connect with you, get in touch with you, what's the best way for them to do that?
Yeah, go to disruptequity.com, disrupt.com, and you can find me on LinkedIn, Facebook, Instagram, all the above. So
Perfect. We'll put links to all of that in the show notes. Ferris, thank you so much for being a guest. This was absolutely incredible. Thank you.
you bet. No problem. Thank you.